Hello everyone and welcome back to Idea Streams. This is the weekly video series where we walk you through testing an idea derived from current market trends by building a trading strategy in Python on QuantConnect. I'm Ollie Hooper, a quantitative developer here, and this week I wanted to explore how we could use the momentum of one stock to produce trading signals for another. I'd also like to mention that we would love to see any ideas that you think we can test here on Idea Streams, whether they be from current market trends or an article you see in the news. So please drop a comment down below and get involved. So as I'm sure you're aware, you've seen the price action in lumber recently, and while I was browsing through Twitter, this chart caught my eye. And it's a chart between the S&P Homebuilders Index and lumber prices, July 2021 futures lumber prices. And you can see that there's a strong relationship here. And this got me thinking, could we possibly use the price action of a stock or a basket of stocks further up the supply chain than homebuilders to predict the movement of the S&P Homebuilders Index? So let's head into a fresh algorithm on QuantConnect. And as always, you can sign up for a free account on QuantConnect using the link down below. So we're actually going to head straight into the research notebook. As you can see, we're greeted with the standard template code here. And something that I like to do whenever I'm working in the research notebook is to actually write in self equals QB. And what this allows us to do is to copy and paste the code over from our research notebook into our main algorithm. So here we can actually change this to self dot add equity and self dot history and self dot indicator. However, we're not actually going to be using these here, and we're instead going to be creating two equities. So first we're going to have the S&P Homebuilders Index, which is XHB. There we go. And then we're also going to be using WOOD, which is it's an ETF of timber companies, which will be higher up in the supply chain for home building. So self.add equity WOOD. And we also want to be taking the symbols of these. So dot symbol. Okay, so XHB is going to refer to the symbol of the Homebuilders Index, and WOOD is going to refer to the symbol of the Homebuilders Index. So here we can get some history. We're going to get 10-year history at daily resolution of these two ETFs. Okay, and so we're also going to be interested in the close price. So we can actually unstack this. If we check out this data frame, just get the head of it, we can see that we've got the symbol, time, and then the close, high, low, and open price, and then also the volume. But we're only really interested in the close price here. So we can unstack the history and just take the close price. And if we check out this now, we can see we've got the time as the index and then the two symbols as the columns with their close prices. Now we can check what these two stocks look like if we actually plot this data. And let's plot it between a date range of, let's say, September 2020 and June 2021. Okay, and so these are our two stocks. And we can see that the Homebuilders Index looks similar to what we saw in the chart on Twitter. Now, as I mentioned at the start, we're going to be using the momentum of one stock, this WOOD ETF, to produce trading signals for the Homebuilders ETF. So we're actually going to be using an exponential moving average crossover strategy to produce these trading signals. So we're going to have windows, which are going to be 30 days and 90 days. And then we also want to create a data frame called EMA, which is going to have the same index as our close prices. Okay, so EMA is just going to be an empty index, an empty data frame, with the same index, the same date time index as our close prices. Okay, so now let's populate this data frame. So we're going to have EMA short is going to have an indicator, and it's going to be an exponential moving average indicator with the first window, so this 30-day window. It's going to be using our indicator ETF, so that's WOOD, and we're going to be using the same time frame before, so the last 10 years. So there we go, and at a date daily resolution. We're going to copy that and repeat it for our long window, and just change it to that. Now let's drop any nans that we have in there, and there we go. So now if you look at our EMA data frame, you can see it's been populated with the exponential moving averages. So we're going to be looking for a crossover, and a way to manipulate our data frame to find these crossover points is first by taking the difference. So that's going to be EMA.long minus EMA.short. And then we're going to be creating our two different signals. So we're going to be creating a buy signal. So when the 30-day EMA moves over the 90-day EMA, that's going to be our buy signal. And then our sell signal is when the 90-day EMA crosses back underneath the 30-day EMA. And we want to be taking the dates of those. So we're going to have buy signals equals EMA.index. So we're making sure that we're taking the dates. And we're going to be checking 2 days. We're going to be checking yesterday, what the difference was yesterday. So if the difference yesterday was positive, the long was above the short, and then today it's negative, that's then our buy signal. So let's look at yesterday first. We're going to take the sign, so numpy.sign of EMA.difference, and then shift it backwards to get yesterday by 1 day. So if that sign is positive, and then today the sign of EMA.difference is negative, we then now know that that is a buy signal. And let's just make sure that we have done our syntax correct, and we're going to wrap these here in parentheses. And then we're going to copy this and do the same for sell signals, but just swap them over. So yesterday is going to be negative, the short above the long, and today is going to be positive, the long above the short, and that's going to be our sell signal. There we go. So if we have a look at our buy signals, this is just going to be a list of the dates. And here you go, we've got 11 dates here as our buy signals. Let's check our sell signals now, and we've also got another 11 dates. And just double check, let's make sure they're different. So we've got 2012, 11th of May, and there we go, 13th of January. So now that we've got these buy signals and sell signals, let's visualize this on a chart so we can see what we're looking at and see whether our buy signals are occurring at the right time or not. So the way we're going to construct this chart is we're going to have the closing price of XHB on one axis, and then these buy and sell signals layered on top at the correct dates. So let's have axis equals close dot XHB, and we're going to put in a date range here. So let's say that our date range, we're going to take a 2-year period of 2012 to 2014. So 2012 0101, and I'm going to take that through to 2014, and that's going to be plot. There you go, so that's our first axis done, the close price. And now we need to layer on these buy signals and sell signals onto the close price of the Homebuilders Index. But remember that we got these signals from the WOOD ETF prices. So let's go close.xhb.lock, and then we're going to give it the same date range that we're using here. And then we want to sub in our buy signals into this. So this is going to return us the close prices of XHB at the buy signal dates. And we're going to use our date range here and then plot it. And we want to change the style of this, and we also want to make sure that they're on the same chart. So we're going to say axis equals axis, and our style is going to be a green up arrow. Let's do the same for the sell signals, except we're going to use a red downwards arrow. Okay, so this is going to plot them on the same charts so we can visualize how our signals from our WOOD ETF prices relate to our XHB prices. And there we go. So we can see that we've got a green arrow here, red arrow there. There are different ways that we can use these signals. We can possibly say that we want to after a buy signal, be invested for a month and then come out, and then a sell signal, short. But the easiest way that we're going to be doing this strategy is by saying if we receive a buy signal, go long until you receive a sell signal, where you'd then go short. So in this scenario here, we would go long at the start of 2012, and then go short here midway through, and then long again up here, and then short again, and then long again. So we are looking at a 2-year period here where there aren't many signals, but from just looking at it, it looks like it could work. But this is potentially because over this 2-year period, the XHB ETF is in a purely upwards trend. So let's now transfer this from our research notebook into an algorithm so that we can backtest the strategy over the past 10 years. First things first, we want to take our two symbols here, so XHB and WOOD, and let's get rid of S&P 500 there, and let's drop these two in. And I think that the approach that we can take is we can abstract these as one being an indicator and the second being the stock we want to trade. So we can actually try this hypothesis on different pairs. So let's call WOOD our indicator. Let's do self.indicator, and let's call the Homebuilders as self.trade. Now remember, as we're using indicators, we need to initialize these indicators. So a good trick of doing this is actually creating another class called symbol data, and then in the initialize function, we're going to take self and then the algorithm, the symbol of the stock that we want to create the indicator about, and then the period, or the periods here as we want a short and a long. So self.symbol equals symbol, self.short EMA equals, and now we can go into the documentation and head to algorithm reference indicators, and if we go down to the reference table, we should be able to find EMA. There we go. So let's just take that. So it's going to be symbol, period, and then the resolution. So algorithm.ema symbol, so self.symbol. The period we said, so for the short, it's going to be periods 0, so the first period, and then the resolution, so resolution.daily. Let's do the same for the long EMA, but just swap over the period. There we go. So now we have the symbol data, so we've got the symbol and then the short and long EMA. So let's actually wrap these two in symbol data so that this gets created automatically. And let's make sure to pass in the algorithm at the start and then the periods at the end. So self and then periods. And let's create this periods variable up here. So it's just going to be the same as before, 30 and 90. Okay, let's move into our onData function here. So we can get rid of this. And the first thing that we want to check is that our indicators are actually ready to be used. So to do that, we can actually create a method for our symbol data that checks that both of the indicators are ready at the same time. So let's create an isReady function here. It's just going to take self, and it's going to return the result of self.short ema.isReady and self.long ema.isReady. So this is only going to return true when both of the indicators are ready, which means that we can just put if not self.indicator.isReady. We don't want to do anything now, so just return. Okay, so once we're past this point, we know that our indicator is ready for both the short and the long EMA. As I mentioned before, the strategy that we're going to be using is if the short EMA is above the long EMA, we're going to be long, and if it's below, then we're going to be short. So that simplifies things quite a lot. So we can just check if self.indicator dot short EMA dot current value is above, so let's just copy that to make it a bit easier, the long, then here we want to be long, and then else if it's the other way around, so the long is above the short, then here we want to be short. Okay, so to prevent overtrading, we only want to trade when it switches over. So let's just check that we only want to go long here if we're already short or we're not already invested. So self.portfolio, and then we can just pass in our trade symbol. So self.trade.symbol is short, or we're not invested. So self.portfolio.invested. Not self.portfolio.invested. Okay, and this is when we want to go long. So here we're just going to do a standard self.set holdings of our trade symbol, which is XHB, and I'm going to set that to long. Let's copy this over and then do the same for when we want to be short. So we only want to trade into being short to prevent over trading, where we're just trading minute amounts and racking up fees. We only want to do that when we're long on our XHB or we're not already invested. So instead of is short, let's just put is long. And let's make sure that we change this to -1, so we're going to be going short. And here let's make sure that we're comparing the short against the long and not the short against the short. There we go. And so the last thing that I want to do is change the dates of our backtest. So let's go all the way back to 2010 for this and set a warm-up. So this warm-up is going to allow our indicators to warm up before we start the period, and that's going to be as long as our longest period here, so 90 days. Now we're ready to backtest and see how it performs. Okay, so now that the backtest has finished, you see that over this period we have performed positively, although the values aren't looking that great. So let's just have a quick look at some of the key factors here. So a Sharpe ratio of 0.392, that's not particularly great. Let's have a look at our biggest drawdown. So that's 36.7%, and we made 28 trades in total. We can also check to see that our algorithm is functioning as we expect it to by using the exposure chart here. So let's open this up, and we can see when we're long and when we're short. So you can see that the long ratio here is 1. So for this whole period between early 2016 to mid 2018, we were long XHB constantly. So this shows that the WOOD ETF was having momentum there, with the short EMA being above the long EMA this whole period. And then we can see we were short all of these other occasions. Now we've looked at the Sharpe ratio numbers and the drawdown numbers, but what can we actually compare this against? Well, we can actually compare this against just holding the XHB ETF itself. So we can go in here, self.set benchmark, and make this XHB, and see how we would have performed relative to XHB by using our strategy. So let's make sure that we got this as a ticker and backtest this. Okay, now that that backtest has finished, we can get some extra information here. So we've got a benchmark chart, which will show us what would have happened if we just held XHB, which we can see here. And we can also have a look at the information ratio, which is our active return over our active risk. And we can see that it's negative here, which means that we didn't perform as well as if we had just held XHB. Just to finish this analysis off, we can double check that these indicators are happening at the same place. So remember, before in the research notebook, we have this chart down here, which shows our buy signals and our sell signals. We can see that we had a buy early 2012, then a sell mid 2012, buy late 2012, and then held it all the way through to late 2013. Then we sold and then quickly bought again. So let's have a look at our exposures in 2012 to 2014, sorry. And we can see that this is replicated. We had a buy and then a sell, then a long buy, and then a short sell, and then a long buy again. So we can see that this is lining up with our research notebook. Great, so I hope that helps show you how we can go from this hypothesis of using two different stocks from different points in the supply chain to use an indicator as one of them and then trade the other. We started off in the research notebook and very easily and quickly created a really useful chart showing these signals and how they dictate the price movement of a different stock. We then moved that over into the algorithm, creating a basic exponential moving average crossover strategy, but with a twist of using a different stock for the indicator. We then looked at how we could use the charts that we have available to us, such as the exposure chart and the benchmark chart, to perform analysis on our backtests and make sure that our strategy is working and to compare how it performed with a realistic benchmark. If you enjoyed this video, please leave a like, and if you'd like clarification on any of these points or have any general questions, please do not hesitate to reach out. Both the team here at QuantConnect and the whole quant community are valuable resources. And as I mentioned before, we'd love to see those ideas, so please make sure that you leave them in the comments. Don't worry if you think they're too weird or too wacky. If we can make an interesting video about a strategy about them, then drop them down below. I'll see you next week. Until then, happy coding.